So this starts the fun part of our Wednesday. So usually at 1 p.m. Eastern, 12 Central, each Wednesday I like to interview a real-life trader, ask them questions, learn about their life, introduce you to them, find out what they do, how they do it, what they think, why they think that, how they've accomplished and achieved certain goals, milestones, achievements in both their family life, relationships, emotional, spiritual, financial, health, all that good stuff. And today we are joined by my good buddy Roberto, who lives up here in Montreal, Canada, and he's one of my best friends, a gentleman that I have spent numerous hours with, have traded with, have coached with, have worked with, have mentored with, have learned from. He's also the gentleman who did produce the program, our French Canadian classes. So there are, to my knowledge, people here in the Quebec area, the Quebec province, who do not speak English and who only speak French Canadian. So he produced this entire program just for those traders. This is the beginning classes of real life trading classes 1, 2, 3, 4, translated by Roberto. So Roberto, welcome to the show.
Thank you.
How you doing, man?
I'm doing great. I'm doing great.
Appreciate having you up in your house, by the way.
Oh, you're very welcome. Anytime, buddy.
I appreciate it. So tell us a little bit about how you got interested in stock trading.
Wow. Okay. Well, I think I could answer that question into two parts. The first part I remember was simply I was beginning college, and I had an uncle that was trading stocks, and my uncle lives in Florida, but he would come to Montreal very often. And so what happened is I started asking questions about what he's doing and why was he doing it. What are those charts? How do you determine the value of a stock going up? And so he started just explaining to me the stock market and the numerous opportunities that come with it. So that was, I guess, the first part of it. I remember the first stock I bought was Bank of America. And I remember buying it, I think, sometime in November, and by January I was already up 40%.
Nice.
So I kind of that's really for me, that was my first experience in trading, and I really, really liked it. But I guess going into college, going into university, I was just more of that buy and hold type of strategy.
Right.
And then eventually, once I graduated university, I wanted to see more about the markets and what could we do something more than just buying and holding a stock?
Fantastic. So are you still in contact with your uncle?
Yes, absolutely.
Okay,
absolutely.
Nice. Is he still trading?
He's still trading, doing it really well, actually.
Very cool, very cool. So do you trade now the U.S. markets or the Canadian markets?
Oh, well, right now, as I'm sure a lot of my Canadians fellows can understand this, is that I typically, right now, I just trade Canadian stocks simply because of the currency exchange. I think that losing 25% on your dollar can have a significant impact on your trading. So because I didn't do the exchange when the dollar was even, right now I'm just trading Canadian stocks. However, what I could say is that, and I did write an article on that,
yep.
There are numerous opportunities on the Canadian stock market. There are ETFs with a lot of volume, a lot of options on those stocks and ETFs. So really, I stick to just typical. I trade about 10 Canadian stocks, those that have a lot of volume, and there's definitely a lot of opportunities in the Canadian market.
Beautiful. Let me see if I can track that article down. I forget the actual name of it.
I think it's Why Trade in the Canadian Stock Market.
Trade ND. Let's see if that works.
Or
trade. I can go in the back.
I think it's My Plan for 5 hours per month, or something like that.
I will track it down.
All right.
While everyone's doing that, I'm going to pause my screen sharing. I'm going to go with the back end. So I'm just going to pause. You guys should still be able to hear me. But so what do you do now? Do you trade full time? Do you work full time? What's your life look like?
All right. Well, I definitely trade part time right now. Mostly I'm a financial planner, I will definitely get my license to be a certified financial planner by December. However, my employer is allowing me to exercise those functions by giving me a 2-year limit to complete my license. So right now I'm a father, and I got another baby on the way. So definitely, and I work full time. So when it comes to trading, I usually like to plan my trade setups on Sunday evening. and see the ones that will pan out.
Mm-hmm.
That's pretty much what I'm doing right now.
So we've interviewed another Canadian financial advisor, Claire Bachman. Obviously, you remember her.
Absolutely.
We've spent a lot of time with her and together and talked with her. Tell us, and we've talked about this some while I've been up here. What is your role in that? Or what do you do in that role? Do you actually invest people's money? Do you tell them what to do with their money?
Wow, that's a very good question. As a financial planner, we look at 7 areas of personal finance. So we'll start 7 areas of finances. So, for example, we look at personal finances with our clients, and that's anything from should I put more money into my RRSP or perhaps my 401k for the Americans, or should I pay down my mortgage faster? Should I buy a car? Should I lease a car? What are the different, if I needed to borrow money, what's the way that I can borrow the money by paying the least amount of interest?
Mm-hmm.
If I were to make a leveraged investment, am I able to deduct the interest? Am I paying attention to certain investment vehicles that might give me a better tax advantage?
Mm-hmm.
Because as I'm sure you know, yes, there's return, but we also call it real rate of return.
Mm-hmm.
And I think it's the real rate of return. So that really counts, right? So for example, you got 2 people that make 5%, but depending the investment vehicle you chose, if at the real rate of return, even though both make 5% on paper, when it's cash in their jeans, they have about, one has 4 and one has 3. Well, even if you made the same return, again, the proper investment vehicle will definitely advantage you. So that's personal finance. Then very briefly, I definitely specialize in retirement planning and investments. Those are really those I would say is the main focus of the work that I do.
Mm-hmm.
And I also talk about legal considerations pertaining to personal finance. And that's also very important to have your will, to have what we call a protection mandate. I think those are 2 very important documents. So I'm able to also advise my clients on that. And then it's also risk management and estate planning. Those 2 are really important.
Risk management and estate planning.
Absolutely.
I like it. So you asked me a really good question a few days ago. And I'm going to ask it to you again.
Okay. All right.
You already know the question I'm going to ask. So if someone comes to you, man or woman, it doesn't matter, and let's say they have $500,000 in full savings, that's everything,
Mm-hmm.
dime to donut. That's all they got. And they want to retire in the next 5 years. What would your advice be for them?
Wow, that's a big question, and I gotta say that my work, that's most of where I put my attention in, because most of the clients that I do meet are either people that are approaching retirement or who have already retired.
Okay.
So let's break down this question a little bit. So if somebody that has 500,000, again, first thing you want to know is, how is this 500,000 allocated? Is it in a full non-registered account? Is it like in a 401k or RSPs? Is it in a TFSA or perhaps a Roth account? Each account, although you can have the same investment vehicles, you can definitely, the ways to withdraw and the tax implications are going to be very different. So first things first is that before talking about a proper investment vehicle for my clients, I like to talk about how did they see their retirement, right?
Okay.
Is their retirement more traveling? Is their retirement maybe staying more at home? Is their retirement maybe spending a couple of months a year in a different country, in a different place? And, is perhaps that country, is the cost of living lower? So those are all things we like to ask as financial planners, and really find out what makes the client tick. How does he see his or her retirement?
Mm-hmm.
And afterwards, what's really important is we want to establish a proper financial plan. I like to call it a proper withdrawal strategy plan.
Mm-hmm.
Again, because we want to look at the person's sources of income at retirement and make sure that those sources of income will be enough and absolutely sufficient to last all of retirement. Right? So that's super important.
So what would be some of those sources of income, though?
So, for example, sources of income, I will say that the typical Canadian, usually what happens is that as they work, they contribute to what we call the Canadian pension plan.
Okay.
For our Quebec residents, it's the Quebec pension plan, but it's very, very similar in nature. So it's a certain percentage of your pay that goes to contributing towards that plan.
Okay, so everyone in Canada, when they work, does it come right out the paycheck?
Absolutely.
Okay.
It's a forced contribution, you can call it.
Okay, so it's kind of like the Social Security in the U.S.
Yeah.
When does that start paying out?
What? So that's a very good question. So you become eligible at 60.
Okay.
However, if you take it at 60, you get penalized. If you take it at 65, you get the regular pension, and if you take it at 70, it gets bona fide, 36%. So in the example you gave me, somebody has $500,000 of savings. Definitely, if health is not an issue, it's probably more advantageous for them to postpone that pension at 65, even at 70. Why? Because that's guaranteed income from the government, and it's also an income that's indexed to inflation.
Interesting. And so that that payout is in correlation to how much they paid into it, right?
Exactly. Okay. I'll say, for example, in Quebec, once a person makes over $55,000 a year, they stop contributing. So let's say somebody that makes $70,000 a year, during, let's say in September, they've reached $55,000, well, they won't be paying into it afterwards for the next 3 months. So you really cap at $55,000.
Okay. And that's everyone.
That's everyone. Exactly. Okay. So that's why it's also what I advise my clients is that the more money you make, especially if your income is higher and your standard of living costs a little bit more, it becomes even more important to contribute towards other savings and investment vehicles, simply because obviously the pension plan won't be enough to sustain your lifestyle.
Yeah, absolutely. Okay, so we have one stream of income would be the pension. What would be another one?
So then the other one could also be your work pension.
Okay.
Now that's a little bit divided because you have about 50% of the workforce of Canadians that do contribute to a pension. The other 50% doesn't. So again, that's why that's context specific.
Sure.
Those that don't can definitely contribute to an RSP, which is basically, again, it's basically you're creating your own pension. And therefore, by creating your own pension, you're able to select the different investment vehicles out there for you. And the main advantage of that is that there are two of them. When you contribute towards it, it will lower your income for tax purposes. So for example, somebody that makes $70,000 a year is supposed to pay X amount of taxes. Well, let's say if they put $10,000 towards their RSP, which is their own pension plan.
Sure.
That would, on paper to the government, it's likely declared $60,000.
Okay.
So what that means is that rather than being taxed on 70, they'll be taxed on 60, which usually translates into a tax, either not paying any taxes to the government or getting a tax return. So that's really, really advantageous for that.
Okay.
Absolutely. And the other thing that I wanted to say,
stream of income.
Yes, so stream of income. So that you can so let's say, for example, your sources of income could be either your pension or your work pension or a combination of both. If you contribute to your work pension and you're an overachiever, you also want to contribute to your own, create your own pension, you can definitely do that. Then there's the tax-free savings account, which is really, really advantageous because what you make into it is all tax-free, and also you could withdraw from it all tax-free. So that would be the other vehicle. Then you have your provincial or Canadian pension plan.
Yep.
And then your personal savings. Usually I would say most of the people in retirement that I consult have about 5 or 6 sources of income. And that's also including, you could also have real estate.
Exactly. Okay. So, I mean, how often do you have clients that are prepared to have income in both stock dividend and real estate? Is that something that you see often?
Absolutely.
Okay.
Absolutely.
And if they're not in that position, how do you help them get there?
Well, that's really important. The first thing is really through education. You see, one of the big risks of retirement, if you look at retirement before, like about 70 years ago, people would work until 65. But the life expectancy would be about 72 or 74. So in other words, you'd be working 4-to-1. So you'd be working, let's say, 40 years to be retired 10 years.
Yeah.
Now it's a lot more shocking where you're almost working 1-to-1, even perhaps less than that. So basically you work 30 years, but you're also retired more or less 30 years. So that's definitely a huge risk of retirement that I advise my clients on. So obviously it's really important to save as early as possible.
Mm-hmm.
There's, if we look, for example, a really successful company we have in Canada is called Investors Group. I think Claire works for Investors Group.
Yep.
And one of the things in their business model was there is no monthly contribution amount that's insignificant.
Sure.
So rather than sometimes you hear, for example, well, if I don't have $100 a month or I don't have $500 a month, it's just not worth it. Investors group says, look, if you got $5 a month, we'll start you up at $5 a month. There was no insignificant amount.
Sure.
That's really, really important.
Yeah, you got to start somewhere.
Exactly.
For sure.
Exactly.
Okay, so let's switch gears a little bit. So in talking to some of your investors who are interested in the Canadian stock market, what are your thoughts on the Canadian stock market?
Wow, I think the Canadian stock market right now presents a great opportunity. Two main reasons is that I'm sure you've heard about the NAFTA, right? So the NAFTA and the uncertainty that it brought. So if we backtrack, actually, 2016 was one of the best markets. The Canadian stock market was one of the best markets. So it outperformed the U.S. market. It outperformed the emerging markets. Went really, really well. However, in 2016, what happened because of the uncertainty with the NAFTA, the Canadian stock market started to correct and drop because investors were feeling a little bit insecure about what would be the cause of that deal.
Sure.
And then what happened after that, we've been experiencing a lot of, so basically you could say on that first point, the Canadian stock market was decreasing, right? And then afterwards, we have been having that volatility in the markets lately, like since February, where the markets have corrected, which made the Canadian markets drop even more.
Right.
Okay, so we have a lot of portfolio managers right now that are looking at Canada, especially that a NAFTA deal is likely looking to be signed. Right, so the Canadian markets have definitely over the last 2 years not evolved as the other global and international markets. So there's a lot of potential for upside right now.
Interesting, and that's something that he definitely talks about in this article. It's a really good article. If you guys want to get a chance, check it out. For those who do live in Canada, and also not even live in Canada, but living in the U.S. I mean, I have the majority of my real life traders and they do live in the United States. And it's something to think about because you can really get 20% more buying power right now buying Canadian stocks. And it's at least something to consider, especially if it's Canadian bank stock.
Absolutely.
Right?
Absolutely.
They can pay some great dividends. BMO, I mean, what's your favorite Canadian bank stock?
Right now, I like there's BMO, there's CIBC. TD is definitely the one that seems to have the most growth attached to it. Not the highest paying dividend, but definitely the most growth attached to it. But CIBC right now is providing a great dividend. I think it's very close to being at 5%.
5%.
5%.
Nice.
And so there's two ways you can do it, right? Let's say you go with a Canadian stock, like CIBC, you buy it 20% cheaper. But then what you could also do is, let's say, you hold it for a little while and then the dollar comes even again, you sell it again. Well, then you're going to make money on your stock, but you'll also make money on the conversion because you bought it 20% cheaper and
exactly.
now you get 20% more afterwards.
Right. No, that's exactly right. Because you're getting more bang for your buck, at least right now.
That's right.
When was the Canadian dollar and the U.S. dollar even?
About 2009, 2010 area.
2009. Let's go back and look at this. So this is yep.
Right.
For a while. So it hung out. Let's see. 2010. You actually were up on us in 2011.
Absolutely.
Barely. But then, yeah, it really had a massive, 2012, what caused that, do you know, 2012, 2016?
The oil, because you see the Canadian economy is very dominant in oil and financial services. We're a big country with a small population. There's just not that much diversity in the Canadian economy, let's say, compared to the U.S., for example. So what really took a hit was the decreases of prices in oil.
Sure.
That really made a lot of uncertainty in the Canadian market, and simply that was pretty much what attributed to that big decline in its value of the dollar. Man,
and that was a massive. We had almost $1.50 back in the very, very beginning of 2016. That is huge. That's huge. If you had to make a wager, when would you say? Does it ever go back to 1-to-1?
Oh, absolutely, absolutely. It did happen in the 70s. It did take like about 40 years to go back to 1-to-1. The thing is that Canada being dominantly exporting its goods and services, it's not really to its advantage to have an even dollar. Actually, the ideal range is about 85 cents.
Okay.
Simply because 85 cents will not penalize too much those who buy in the U.S. or buy with the U.S. dollar, but at the same time, those that sell will get they'll get more for their value, right?
Yeah.
They'll get that bonus. But I definitely think as oil prices are climbing up again, it's definitely going to impact itself into the Canadian dollar.
Gotcha. So I have a question, student asking, the question is, do you recommend that a person with $300,000 in savings have it spread over 5 accounts to stay under the $60,000 loss insurance?
Wow, that's a very good question. Very, very good question. Again, it depends your investment vehicle. So if you go with what we call a GIC, what is a guaranteed income certificate, there's definitely it could potentially be to your interest in respecting those amounts. It's actually $100,000 now. So each bank, for example, will guarantee $100,000 per account in a certificate deposit. The only thing is that for many Canadians, why this was perhaps maybe of an older way of thinking, because
Sure.
if you look at the Canadian banking system, I think right now it's been ranked the best banking system in the world for almost 10 straight years.
Wow.
There's a lot of solidity. It's regulated by the government. So Canadian banks are not able to go into as much debt without having enough cash on reserve, right? So that's why when we had the financial stock market crash in 2008, Canadian banks were very solid, and despite them going down in value, because there was just the overall selling of the market that presented a great opportunities, and Canadian banks bought a lot of American banks because it was just a great opportunity for that. But if it is, just so you know that, like we call them the big six, so we have TD, Royal Bank, CIBC, TD, BMO, and National Bank. Within those banks, you have different types of like fiduciaries. So I'll give you an example that I work for National Bank. So we have 3. We have National Bank Trust, National Bank NatCan. So that's 3 fiduciaries within that same institution. So somebody with $300,000 that would have 3 GICs, 100 per account would be covered for $300,000.
Interesting. Okay. I knew none of that, so thanks for teaching me something new every day.
I think in the States it's $250. I think you guys have the FDIC. Is that it?
FDIC insured. Yep.
Yeah. Okay.
Yeah.
So in Canada it's $100,000 though.
Gotcha. So okay, here's a controversial subject. If somebody came to you and said, "All right, I want to retire and I want to double my account in a year." Mm-hmm. So let's say they have $100,000 in a brokerage account. They want to double it in a year. What do you tell them?
Oh, I would approach that approach with high caution.
Okay.
High caution, because it's different to have a retirement account. So if somebody says, I only have $100,000 accumulated in my retirement account, and especially if the older that person is, I always tell, like, one of the first things I tell my clients when we do investment decisions is never set yourself up for a knockout punch. Mm-hmm. And so somebody coming up to me with $100,000 in their retirement account, and that's all they have, and they can't afford to lose it because their other sources of income at retirement will not be sufficient, I would definitely approach that with high amounts of caution.
Gotcha. So more or less you would say don't do that.
I would definitely not recommend that. Absolutely.
Well, now, would you recommend any of your clients try to manage their own money, or do you send them to private clients of some kind, or money managers?
Well, usually what I advise my clients, the stock market education on every client is very, very different. Mm-hmm. Most people, we talk at Real Life Trade, we talk about ours. Like, we don't talk about gains in forms of percentages of return. Mostly we focus on R. So I made 5R this month,
sure,
or 10R. Why? Because that's really what's the most important, so that you're able to really put a number on the gain or on the loss that you made. So sorry, just repeat me your question again? So
yeah, so if someone has, if they want to trade, so let's say.
Oh, right. Yeah. So what I would advise usually, especially if they're going into it, or I see that their stock market education is not necessarily, I don't feel necessarily that it's appropriate for them to trade their entire account. Usually we'll go with about a 10% rule.
Sure.
So again, somebody like I say, you have 100,000. Okay, let's invest 90,000 in something that we feel is a little bit more going to be more consistent. Again, the analogy I give is a steady dime is better than a rare dollar.
Yeah.
So let's go with that steady dime type of portfolio, and then let's take the other 10,000 that you feel comfortable, and let's open a brokerage account, and you can perform yourself, let's say, after the end of the year and see how you did. So that if you do extremely horrible, you haven't up for a knockout punch.
Right. So I'm going to test really quick. Can you guys still hear me? Some of the people who are live saying the sound has dropped out, but it should be okay. Classic had to turn the volume up. That's weird. I didn't really change anything. All right. Well, I will check. I'll just keep an eye on that just to make sure. No sound. That's weird. Okay. Give me 1 second. We'll pause the recording. So yeah, that makes sense. So 10%, 10% rule, and that's very similar to what Claire said. Claire said also, if she has a client with whatever amount, $100,000, $1 million, and they want to trade the market, they want to take that money and grow it themselves. She would, she said, hey, before you do anything like that, learn how to do it. Let's take a small percentage, trade for yourself, and let someone who does this all day, every day, as a professional, manage your larger sums of money.
Exactly.
Is that kind of the route that you would agree with?
That's exactly. Like I give a classic example, for example, to my clients. When we had the British exit, I'm sure the real life traders that were there already. What happened to the markets, Jeremy, during the British exit?
Rough.
It was rough.
For 2 days.
For 2 days,
yeah.
And then we recovered quickly.
Very quickly.
Very, very quickly. Well, I'll give you an example. When you also have institutional investors that are there to help you, I'll give you a very good example. If you look at Manulife's as portfolio managers, they saw a great opportunity in New Zealand bonds. And so while everybody was focusing their attention on the British exit and either buying or selling or putting puts, they bought New Zealand bonds that were yielding about 7 to 8% on the bonds. And I remember the portfolio manager, I can't remember his name right now, but he wanted to buy for $4 billion worth. And he was only able to buy for $2 billion because there wasn't enough to go around.
Wow.
And that funded 8% in 1 month.
Nice.
But again, those are institutional investors. Manulife has headquarters in New Zealand. This is not necessarily the information that maybe the average retail investor could possibly have.
Right.
So I think it's also good to benefit from that expertise.
Gotcha. No, it absolutely makes tons of sense. It really realistically does. So here's a question: how would a U.S. citizen go about, in your opinion, opening up an account and trading the Canadian markets?
Oh, wow. That's super. I think that'd be fairly easy. I think all you need to do is open a brokerage account.
Yeah.
And just there's a website I use. It's called TMX Money.
Okay.
It's like you could say it's like the Yahoo. It's like the Canadian version of the Yahoo Finance. And so TMX Money, really, you'll have all your stocks. You will have which stocks are gapping up, which stocks are gapping down, and you'll also have the right ticker symbols. So just like we Canadians buy U.S. stocks. Should we want to, we simply, you just want to have the appropriate ticker symbol. And if you don't know the ticker symbol, if you go into search, you look it up, you'll type in CIBC, and it will give you the appropriate ticker symbol.
Okay, so now I want you to help me pay for this trip up here. Okay. What Canadian company should I invest in or be trading?
Wow, very good question. So right now, we could also look at the ETF, EXIC.
Okay.
I think we also have.
I think we're back. Can you guys still hear us? There's definitely something weird going on because Canadian government doesn't want this they don't want this joining of the minds to happen right now. Okay, yeah, it just dropped out for a quick second. So you guys can hear me. All right. Sorry about that. I don't really know what's causing that to drop. It's very, very weird. I'll turn my Wi-Fi off on my phone just in case. I don't think that's going to have any issue. But what was that?
It was XIC.
XIC and on the TSX. Here we go.
It's like your VTI in the US.
All right. So I mean, tell me about this ETF. What's special about it?
So basically, it just tracks the overall Canadian market.
Okay.
Okay. So again, for the same reason I explained to you before, during 2016 we had a correction simply due to the fact of the NAFTA. We weren't sure where that was going, and then the general market sell-off we had in the month of February and March.
Yeah.
Right now just presents a great opportunity. So. I just like it because it's just a great way to join, get into the market and participate into the upside without having to do selective single stock picking.
Sure. How do you trade this?
Oh, the way I trade this really, I'm more of like especially when it touches like the 100 or the 200 simple moving average. Usually I see great buying opportunities.
Okay.
Usually the XIC, I will say, I don't day trade on it. I swing trade on it.
Sure.
So I like to buy major supports and major resistance. But you could see that this XIC buying at support, selling at resistance is definitely an easy strategy to do on this specific ETF.
Yeah, I'd have to agree because the overall longer term approach of trading, I think, is easier than most people give it credit for. The challenge is just that holding period of being patient and waiting and, like you said, going after the safe dime. A lot of people want to grow their money a lot faster than then is reasonable? What's your thoughts on that as far as just quick growth in the mindset of money? Right? How would you advise someone if they come up to you and go, man, I have my money, I just want to grow it really, really, really fast?
I think you're gonna have to go into day trading.
Okay.
You're gonna have to do either day trading or just like going all in on certain stocks and really expecting a big up movement. But if you go with the swing trading approach, you gotta be patient. You gotta be patient. Maybe instead of a steady dime, you probably could do a steady quarter.
Sure.
But to really say I think I am. One of the things I've seen with many of my clients who have lost an enormous amount of money is because they were much more focused on growing their money as fast as possible rather than being consistent on their trades. And that has cost them a lot of money. And so just like we at Real Life Trading, we teach how to do proper risk mitigation, perhaps if you're holding a long-term stock to buy puts, and how to protect yourself. Most people don't know necessarily how to do that, or what they do is like they try to catch a falling knife. And so if your focus is really on just, I want to double my account in 3 months, and you're not really focusing on the actual process of how to get there, I think that could be really a costly mistake. I'll just make a parallel. Somebody that wants to, Health and Wellness Month, you want to develop yourself to be the best possible physical version of yourself you can be. If you just focus on the way you want to look without focusing on, what's my nutrition got to look like? What times of the day can I train to make sure I don't miss a workout? What do I need to plan? It's really that process that's going to lead you to that example. So anybody that wants to, let's say, develop a new personal record, let's say on their bench press or push-ups, you're going to have a plan, right? You're going to say, well, look, I'm going to start with 10 push-ups today. I'm going to increase it to 1 to be able to do 100 push-ups in one sitting, for example. Sure. Right? You don't just say, I want to do 100 push-ups and not have any specific plan. And if your goal is just to do 100 push-ups and you don't have something consistent or an approach that you can apply and measure, it's going to be very hard for you to do that. So I think that's how I approach it, which is simply wanting to double in your account. Man,
I got so many questions now with that statement. Boy, oh boy. Okay, so here's the 2 things I want to talk about with you before I get off.
Okay.
The mindset that you have, and number 2, Canadian wheat stocks.
Yes.
Which one do you want to attack first?
The mindset on growth stocks.
Okay. Well, so the mindset thing. Now, here's what's interesting. I'm going to tell everyone here, I didn't preface Roberto. I didn't tell him what we're going to talk about. I said we're going to have just an interview. And that's the way I do it with everyone. So I just chat with people and just ask them questions. So my question to you is, over the last 4 years, and correct me if I'm wrong, but you got married, you had a baby, another baby on the way, you moved into a house, and you quadrupled your income.
That's right.
What shift mentally, if you have to look back, what kind of mental shift did you make to 4X your life over the last 4 years?
Wow, that's a very, very good question. I gotta tell you, as much as people might believe if this is true or not, I'm telling you, I let's say in that 4X, I would attribute at least 2X on 3 $9.99 books that I bought on Amazon.
Books that you bought?
I bought 3 ebooks on Amazon from the same author.
What books are these?
So this is, you guys, honest, Randy Gage. The first book that I really enjoyed was Why You're Dumb, Sick, and Broke, and How to Get Smart, Rich, and Healthy.
Yep.
That was great. Then I got the other title, which I think you, Jeremy, will really resonate with. The other title, again from Randy Gage, is Risky is the New Safe. And being safe is the new risky. So, just for example, today for my younger real life traders out there, working for the same company for 30 years, getting a gold watch and retire is less and less likely. There's actually been studies out there that suggest that the average 20-year-old today will have about 12 to 13 different employers in their life.
Sure.
So sometimes, for example, so in that case, what I learned just from those 2 books, risky is the new safe. Is it risky to negotiate your salary? Is it risky to saying to yourself, you know what? If my current employer is not willing to pay me for what I think I can bring to the table, perhaps this competition is willing for me to do it.
Okay.
And that's exactly what I did. I switched, I Forex, and I switched 3 times. I switched 3 banks.
You switched 3 banks?
I switched 3 banks. So I always knew I liked to do banking, and I wanted to be a banker. However, what I've learned is that, you know, it depends the type of managers that you have, the type of people that are surrounding you, that you're you know, and that are giving you the advice. And you definitely want to be with an employer that's not going to give you a 10-year plan when you know you can probably do it in a 3-year plan. So, for example, had I stuck to the first bank I worked for, I would not be a financial planner in the time frame that I am today.
Okay. So you mentioned 2 books,
yes.
or 3 books. This is 2. What's
so the other one is Mad Genius.
Same guy.
Same guy. I'm a Randy Gage fan. Big Randy Gage
fan. I spelled it wrong. It's Gage, right?
Yes.
Randy
Gage. That's right.
Mad Genius. All right. I'm gonna get all 3 of these.
Yes. You know, $9.99 or maybe $14.95. I think I got them on special because I bought all 3 together.
Sure. So those books helped you shift your mindset.
Absolutely.
So mindset, you would attribute a lot of that to your growth.
Absolutely. For at least half of it.
Okay.
For at least half of it. So it's kind of funny. So maybe you would attribute maybe 2. I mean, yes, I have met other people. I've also, you know, kept an open mind to things. But really, like, I have gotten a lot of value from books that I paid $9.95 from.
Sure.
I think I can't exactly quote it, but there's this famous writer. His name is George Orwell.
Yeah.
And he started talking once. I saw him in an interview where he's talking about writing a book is a very human-defined experience, because we as humans tend to procrastinate. We as humans, you know, if we can't get it right the first time, we don't necessarily want to try. And writing a book and being faced to a blank page and, you know, writing something for 8 hours and realizing what you just spent 8 hours on is not conveying the message you're trying to convey and put out there. Writing a book can demand a lot of effort. So I respect all writers for taking on that challenge. And if you're able to write a book and publish it on a subject you're really passionate about, you know, you went through a lot of thinking, a lot of human-defining experiences, and yeah.
Shoot, so that's the same guy who wrote 1984. George
exactly.
Okay.
Exactly.
So you just fired me up to finish my books.
Yes.
Yeah. Okay. Yeah. So I like that. It's a human-defying experience. It's a very interesting way.
That's why I respect all writers.
Yeah. Wow.
Absolutely.
Wow. Okay. So what else? What else helped you make those shifts?
Keeping, you know, openness to experience.
Okay.
Accepting that other people we don't necessarily all have similar values. We don't necessarily all have the same way of looking at things. But being open to other people's experiences is definitely something that has tremendously opened myself to forexing my income. You know, for example, I studied in psychology and my wife studied in economics. I always have, not to say that my wife is not a human approach person, but what I'm saying is that my wife definitely had more of a business sense than I did.
Sure.
You know, sometimes we talk about, like, I'll give you an example. If I just said the word today, loyalty. What is loyalty? What is loyalty towards an employer? And, you know, and so, for example, like I was saying before, you know, is there competition willing to pay for my services or willing to give me more money for for my services? You know, for me, loyalty has always been very important. So, and then at first, like, to negotiate my salary, to just literally say to my employer, "Listen, I'm going to leave because I got a better opportunity elsewhere." You gotta, like, sometimes you gotta redefine your values. You gotta redefine the way you see that. And so, like, my wife really helped me with that.
Interesting.
And just, like, yeah, talking with people.
That's an interesting mind shift change, the loyalty aspect, because that could be something that holds people back from quitting their job. Might simply be the fact that they are afraid of hurting someone's feelings or appearing that they're not loyal.
Absolutely.
I've never thought about that.
I mean, I'll give you an example. I was working for the second bank, and I had just gotten the promotion, and I had just finished the training. And the last day before I finished my training, I left. Just by doing that, I was able to add about $15,000 to my income.
Wow.
And I'm saying this completely humbly.
Yeah.
Why did I do something like that? Is because, I'll be very honest, like, I think most employers, you have to see it as, you know, there's definitely a profit. I mean, unless you're working for a nonprofit, profit has to be part of the equation, or else you're just not able to sustain yourself.
Sure.
So for employers, an employee is an expense. And that expense eventually will have to bring forward some profit, because or else they're not just going to pay you to break even or to even lose money. That wouldn't make sense, and that wouldn't be a sustaining business model.
Right.
Now, knowing that, if they're going to prioritize their profits and they're going to prioritize their business plan, you need to prioritize your own profits and your own business plan. Mm-hmm. So that's what I mean sometimes by loyalty, is that I give the example of CEOs of companies, of any CEO that's making multi-millions of dollars. They did not get there by simply accepting that $2 raise or that $4 raise or that $10,000 raise. They got there by negotiating their things, knowing what their value was, working on themselves, and just exponentially putting out there everything they could do.
But that's hard. Did you have to practice salary renegotiation?
Absolutely. Yeah, for sure. I mean, I remember, for example, the first time I negotiated my salary was 24. Like for me, even in my surroundings, even when I would speak about it with my colleagues, and they say that's not something you could do, that's not something you should do, or it's not right. There's like a certain negative association that's related to negotiating your salary.
Okay.
And so I had to practice, and I kid you not, the first time I negotiated my salary was simply my mouth went dry, my heart was racing, I was no longer sounding coherent. But you get better to that. And then today, the way I see salary negotiations, and this is what I even this is how I start all my negotiating conversation, is negotiating right now is important for the both of us. And it's like, how's that? It's important for you, the employer, in order to get what you want.
Right.
Because you have a certain plan with me by hiring me. Right. And it's also important for me to get what I want. And that's what's going to really establish the longest term relationship, because if an employer, for example, finds themselves doing work, more work than what they feel they're getting paid for, that employee might get demotivated or unmotivated, start looking elsewhere. And as I'm sure you know, it costs a lot more to an employer to hire someone new than to simply give them that raise. Yeah. So you're keeping the employee motivated. And on the other side, if the more the employee is motivated, the more he's going to want to do more, the more he's going to want to grow more, and that will also reflect in the performance of the employer. So
here's a question for you that you're definitely know the answer to. How would someone who is self-employed and has no boss, how do they renegotiate their salary?
Wow, I think by that's a very good question. And the way they could do it is perhaps negotiating their deals. I think we were talking about, for example, somebody, let's say, that wants to speak, a self-employed that wants to speak to people about a specific topic, whether it's on management, on growth, physical activity, whatever. We were talking about maybe, speaking for $5,000 for 1 hour. The specific individual might find that expensive, right? But companies, corporations can. And so, for example, if you want to talk perhaps about time management, right, because you're in personal development and you're self-employed, well, maybe, a big company like RBC might want to pay you $5,000 or $10,000 for 1 hour, because you're talking maybe to their 30,000 employees, and they see that value, right? So I think it's also by redefining your services and how you want to give those services, right? You can have people pay for one specific program, or you can have them go with a monthly membership. Okay. Right. So that's I think you see, for example, why do you have psychologists or people that like to have their consulting businesses? Why do some people charge $100 an hour and other people charge $1,000 an hour? Sure. I'm sure if you wanted a coaching with Grant Cardone, it probably would not cost you anywhere, and it would cost you $500.
Sure. Yeah. Interesting. Okay. Very, very cool. Well, I'm going to go ahead and tell you now that in January is Extra Income Month. So I want me and you to make some type of video where we negotiate salary to help people.
I love that. I'm definitely.
You going to jot that down?
Absolutely.
Okay. Because I think that's one of the things that people, again, have that fear of getting turned down, getting rejected, not knowing what to say. And a lot of people do have a giant fear that they think they can be let go at any time, which is really kind of, obviously people could get fired, but you have to mess up pretty bad for a corporation to fire you. Absolutely. I feel like,
yes.
Like for a big company, there are so many people who just do status quo or lower that will never get fired. Like you have to be really bad. Now people can get let go and they can get downsized, but in the same instance, if you're one of the best employees that they can be, you're not going to get let go.
And if I can give you share my experience, the more I've negotiated my salary, the more I've got respect from my employers, believe it or not, because they've admired that in me. Because if I'm willing to do something that we all know can be very uncomfortable, but in a respectful manner, that means I'm also to go into my my discomfort zone or my uncomfortable zone with my work, right? To grow more and to grow more and become more for that employer at the same time.
Sure, absolutely. Okay, so let's make a quick switch for a moment. I know I'm taking your brain everywhere. I got so many questions I could ask you though in this interview, but thankfully I get to ask all these questions anyway.
Sure.
Weed.
Yes.
Up here in Canada.
Yes.
What's going on, buddy? Tell me.
Wow. Definitely marijuana stocks are definitely, if people think they've gone up, when they do correct, and they will correct, great buying opportunities. I would say truthfully, if you're buying weed stocks, I call it my Vegas portfolio. Simply because there's just a lot of uncertainty, but there's a lot of growth. Now, what I would advise also real life traders, if you're interested into that industry, you're interested in making money, there has been a lot of money right now that has been pumped on the fabrication of weed, of marijuana. But you also have to look at the market in general, and weed stocks, or if you look at the marijuana plant, there's a lot more than just the production. And so what I'm looking right now is where has not been much money that's gone in is to the what we call the alternatives. So for example, edibles, oil extracts. There's this company, you guys can feel free to look at it. It's called EAT, EAT, Eat Nutraceuticals. And so their model, they don't produce marijuana. All they do is they put in they create derivative products. So they have chocolates, they have drinks, they have oils. Again, so I feel that's a money that's given that the cannabis industry is very young, especially young in terms of legalization.
Okay.
There's definitely other ways of investing into weed. It's not just into the fabrication, that there's a lot of potential for growth.
What stocks do you think would represent that the best then?
I would say EAT, and I believe the other ticker symbol is TNY, which is the Tinley Beverage Company.
Tinley Beverage Company. This is OTC traded. So we have Tinley Beverage, non-alcoholic. Yep, it does look like a weed stock.
Absolutely.
Okay, so Tinley Beverage, and the other one was EAT.
EAT.
What's the ticker? EAT?
EAT, I believe, if you do .cn or something like that.
Probably this one, just EAT?
No, it's not just EAT because it is Canadian. Just if you type EAT.
Okay.
Go on TMX site. Go on the TMX site.
Okay, I got that pulled up.
EAT.
Enter symbol.
EAT. Let's do a. There you go. Nutritional high. That's what it's called.
Nutritional high.
There you go. That one. There you go.
Interesting name.
And you can look at their websites, and you could see their business model, and their. I think they're really they're trying something new. They're trying something because you also it's in the book that I've read, by the way, of Randy Gage. He keeps saying that when everybody's zigging, you want to be zagging.
Sure.
So if everybody right now is zigging into marijuana stocks, I think there's still a lot of potential for that. At the same time, if you want to be zagging right now when everybody's zigging, if you want to collect certain stocks that are for edibles,
different purposes,
derived products.
I mean, that's the thing is you can't. I feel like it's too easy. I mean, if legalization of marijuana is going to happen in Canada, when's it going to happen officially?
Either July or September.
And that's for sure going to happen. 100% pass.
Yes.
Okay, so when it happens, everyone's like, "Oh, weed stocks going to go higher." That's too easy.
Mm-hmm.
That's too simple. So there has to be, like you mentioned, another side of that.
Mm-hmm.
Do you think it will be good for your country if that happens?
Oh, that's a very good question.
Or is that too political?
Very good question. So you know what? I can give my opinion about it. I mean, I think for sure what scares a lot of people is the legislation around it. Like, for example, if you drink and drive, there will be consequences to that. Us in Quebec, we limit, for example, we say 2 drinks per woman, 3 drinks per man within the same hour. If you go above that, you will likely go over your limit.
Yeah.
So you have, direct legislation to able to, protect and surround that alcohol, for example. For marijuana, is it 2 puffs? Is it 2 joints? Is it 1 edible? The legislation is very uncertain about that.
Sure. Very good point.
And I think that's right now what most Canadians are struggling with. Another thing, for sure, marijuana smells a lot. So when you walk, you walk downtown or you walk anywhere and you smell it, it's not like somebody drinking a beer, right? It's definitely out there. So I think just once the legislation occurs in the proper way, and we know how to properly give specific boundaries, I think more and more people will be welcoming towards it. I mean, if we look at, for example, in the Netherlands, in Amsterdam, it's been legal there for a very, very long time, and it's not as chaotic as people think it would be. Actually, they're not one of the countries that use marijuana the most, believe it or not.
Interesting. Okay, very cool stuff. Clive asked a question. Do you trade the stocks on the Vancouver Exchange?
Well, yeah. So the Vancouver Exchange, I don't currently, because I just don't. Most of the stocks that I look for do trade on the TSX.
Okay.
But the Vancouver Exchange, those are really, I believe they're smaller cap stocks. They're a lot more volatile. I'm a little bit more I like to see volume. I like to know that if I get into a stock, I can get out fairly easily. Very important, especially for my Canadian traders. I think you guys already know this, but the bid and ask spread for special, stocks on the Vancouver Stock Exchange could be a lot wider. So you can buy a stock, it can go up, but if it didn't go up well enough, depending on how you got in and what was your stop and entry, you can still have a loss regarding to that.
Sure. So make sure to keep the bid-ask spreads in mind. That makes sense. So you're mentioning, going back to the marijuana discussion for a little bit, is there any companies that you know of right now that are taking and doing a lot of the medical research to see how you could extrapolate or use some of that information to not use the information, but use some of the chemicals or the CBD oils or anything like that to help paranoia or schizophrenia or any of this mental diseases that might be affecting people? Are there companies in Canada that are doing it more of the medical side? Do you think would be a good investment as well?
I think most of the companies of Canada are doing it for the medical side. The recreational side will just be a byproduct of the medical side. But even though it's not fully legal from a federal legislation, you still have people, for example, in Canada that I'm sure in the US will have their card. And so let's say they've been diagnosed with anxiety and they'll get a medical card and they could go to a dispensary and buy it. And even if it's done for recreational purposes, it will still say when you buy the product, good for sleep, for insomnia, good for increasing appetite, etc. So it's always going to be, the focus definitely on the medical side. The recreational side will just be for people
who just want to do it.
Exactly.
Yeah. Exactly. Got it. Dude, beautiful stuff. Does anyone else have any other questions while we're here? Charles says, when someone comes up with a THC real-time breathalyzer type test, it will be a golden ticket, in my opinion. That is a very good point, because that's something that a lot of legislation is going to have a hard time to deal with. Is how are you intoxicated, if that's the right term, with marijuana? That's going to be a big challenge, because obviously you can get too stoned to drive.
Yeah, of course,
right? We've heard that argument, oh, you can't. Alcohol does worse damage than marijuana, and it's those arguments those are best served for the doctors who know a little bit more, because bottom line, everything in moderation kind of situation, but bottom line is it can absolutely push you over an edge where you shouldn't be operating any type of motor vehicle or heavy machinery or anything like that. So it definitely will be interesting to see how we formulate that legislation in both America and Canada. What are your thoughts on?
Absolutely. Again, because the legislation part is it just grows so many factors, because you could take something that's been prescribed to you. You can take a painkiller, and if you have a painkiller that's going to give you a high amount of sleepness, and you drive with that, you can be dangerous also, you know, and that's not necessarily regulated. So when you open the debate for cannabis, you're not just opening the debate for cannabis, you're opening the debate for all other substances and how we're going to control it. And that's a big question for governments to work with.
Good point.
You know, like we spoke about alcohol, we're talking about, you know, the THC content, but like I'm sure, you know, you can build a tolerance with alcohol, and so I'm sure you could build a tolerance with, for example, with cannabis. So, you know, for some people, they drink 2 beers, are no longer able to drive. Other people drink 10 beers, and they'll pass the test just because, you know, their alcohol consumption is a lot more higher than others.
Yeah, more efficient, potentially.
Yeah.
Sure. Man, fascinating interview. I could easily do this for another 9 hours, but thanks so much for being here. And, I mean, you're not going anywhere because we're in your house.
Absolutely.
But traders from around the world, thanks so much for tuning in to your Wednesday real life stock review, stock interview with my good friend Roberto. And again, I posted earlier his article that he wrote and also the classes that he did. And he's been a real life trader from day one, always chatting with me, always texting about the markets, a great resource up in Canada. And another reason, I had a person ask me recently, we have a lot of Canadian traders. I would argue about 20% of real life trading is built around our beautiful neighbors to the north. So just kind of keep that in mind. If you live in Canada, there's a lot of Canadian traders who are here. Canada is a massively large place though. So, you know, you might be ranging from British Columbia to Quebec or Newfoundland. That's a huge line. There's a lot of trees in between there. So again, if you are trading in Canada, just simply know that there's absolutely a space here for you real life trading. You can be in Canada and trade U.S. markets. You can be in the U.S. and trade the Canadian markets. It's a beautiful blend. There's a lot of opportunities out there, and it's all about what you know and how you take advantage of that information, protect your risk, and grow your account safely. Folks from around the world, thanks so much for tuning in at 2 p.m. Eastern right now, which is about 3 minutes away. The Federal Reserve is going to be coming out with some information and will likely cause the markets to move a little bit. How would someone go about contacting you, Roberto, if you want anyone to contact you?
Definitely. You can definitely shoot me an email, and I will be more than happy to answer.
Which email address do you want to use?
All right, so let's use my email. So it's Knight with a K, so K-N-I-G-H-T.
Yep.
_
Yep.
1356.
Okay.
At hotmail.com.
At hotmail.com. All right. So that is Roberto's email. If you guys want to email him for any questions, concerns, or maybe just want to connect with him in the Quebec or Montreal area, just to chat markets. He's a great dude, but he will be busy once the newborn, once Jade comes to the earth. You'll be a busy man, but it's it's obviously always worth it. All right, folks from around the world, thanks for tuning in. 2 p.m. Eastern, Federal Reserve announcements. I will not be in any positions. I'm going to go to the park and go to the Botanical Gardens and hang out. And then tomorrow night is Thursday, which will be Transportation Thursday. This afternoon, obviously, I'll be doing a stock review. And from 5 to 6 p.m. Eastern is Energy Wednesday. And then after Energy Wednesday is over, I'm going to go see what Montreal has to offer in terms of nightlife for my 30th birthday. Folks from around the world, you're amazing. And until next time, love life, live life, and trade it. You all rock. I'll see you later.